Good morning, everybody. It is currently 8:45 in the morning. So we have no news for Monday, Tuesday. First news is on Wednesday, which is going to be USD CPI at 1:30, and we have some CAD news at 2:45 and 3:30. We then have on Thursday some Euro and USD news, which will be very interesting because we trade USD as our main pair. That's throughout from 1:15 to 1:45, and then Friday we have GDP for GBP, the Great British Pound, GDP. I don't know if there will be one, but it's been quite positive. Now, truth be told, excuse me, we haven't forecasted anything higher. Like here, we forecasted the same and less. It was higher both times. We're doing better than expected the past two times. Now, does that mean it's going to continue? I don't know, because there's only been once where price has been bullish or GDP has been bullish month after month, which is actually April, May last year. And guess what? It's April, May this year. April, May last year, it was followed by two bearish, excuse me, pullbacks. Let's go to 2024. So April, May. Again, kind of positive. Following month is neutral. So it's not enough to say that that is going to be a pattern. April, May, this time it wasn't, but it was both bearish and then it was positive. So it's not enough to say there's a seasonal tendency. So I think it's going to be one that you just have to wait and see. So last week we'll let me just quickly check if there's anything that's kind of going on. Okay, so last week Friday I did say I was going to stream the New York session and open, but unfortunately I didn't. And I do apologize for that because I did say I would do it. And the reason why I didn't do it is because I just simply wasn't willing to share my plan before I was going to do it. And the reason why I wasn't willing was because it's going to be a high risk event. I didn't want anybody to fall into the trap of over trading NFP, being inexperienced. And a lot of my ideas change very quickly. So I don't want to like post ideas when NFP volatility is in play, or post my ideas and people copy me. Because I'm aware that, yes, I'm doing this for educational purposes. I'm not trying to get people to copy, but some people may. And I don't want that to happen. So the best thing to do, the best cure to the thing, or any cure actually to anything, is prevention. The best prevention for any STD is to not get it. The best prevention for any illnesses like that can be caught through transmission is to not catch it, right? Or the best cause for the prevention or cure for diabetes is to prevent it if you can, if it's not genetics. Then you can, you know, take care of your diet, over indulge in sugars. If your body is in one tact, in one piece, the best cure to a broken body is to not break it. Whereas not going to boxing, not going to bad places you shouldn't have, not be in gang violence, because you live by the sword, you die by the sword. Those are the types of things that I'm talking about, where prevention is better, is the best cure for anything. So because prevention is the best cure for anything, I believe that me sharing my ideas could have caused some pain. Now, at the end of the day, we did have this trade right here. Right, this is the trade I had yesterday. So we had this two-hour order block, which you can see from here. Right, it's an order block because this is the last bullish candle. We then had a displacement from 1, 2, 3 candles. You can see there's a fair value gap here. And the reason why we didn't use this intermediate term high is because when price created this low over here, it came back up, taking this out, number one. Number two, it was, if you were to draw like this area here, we don't have, apart from this fair value gap or this imbalance here, we don't have any other area around this 7-9 level optimal trade entry that is a imbalance or an area of which we can enter sales from. So the only three zones I care about are equal highs or equal lows, relative equal highs. Then I like fair value gaps and order blocks. Those are three things I personally use for entry purposes. Okay, I'll never enter off of anything else. And I'm not going to explain that right now. But I use this 2-hour order block right here, and I was waiting for price to have reaction out. Normally, when price uses a zone one time, it gets weaker the second time, right? Normally. But why was I able to reuse it on the second touch? Well, first of all, I'm bearish on this. I was bearish on this for for a while, and I've been targeting this low for a very long time. Why? Because lower high over here, this is a swing low. This swing low got taken out by this leg here, but this is not just a normal leg, it's displacement. We had the displacement here. You can see it came down with some aggression, just black candle after black candle, which is my time for bearishness. So it took out the swing low, so we're bearish, right? We then had to pull back into this bearish fair value gap, the only one on the daily time frame. Like, though there is black candles, this is the only actual fair value gap. We came up to, I believe, just above halfway or around halfway. And then we now created that swing high from this 3 candlestick pattern. And from there, we're bearish. And 1, 2, 3, 4. Out of 5 days, we've been bearish 4 times. So if I was selling each day, I would be, I think we did take a loss on that blue candle, but that's fine. That's part of the strategy. And that's why it's good to have a bias and a pair you're good with, because once you have those 2 things, you're more likely to be right than wrong if you're good at tape reading. So we'll only be looking for sales. So even though price came up from this area, which is this fair value gap, I think for an hourly time frame, and we went up, that wasn't enough. I don't like taking counter trend trades, even if I'm good at knowing. I'm practicing them, but I'm not actively taking them on my live account. Right. So that's the context of the trade. So the context, excuse me, we're bearish. Now, the only thing I was cautious of, which made me not enter in with the risk I would normally enter, was the fact that I don't know. With NFP, it doesn't always just cleanly distribute in one direction. Sometimes it goes up and then goes down. But it was such clean news, and I didn't want to wait. I didn't know with NFP, sometimes you don't get that pullback. As you can see, this is the 5-minute. We didn't get one pullback whatsoever. And even with this fib retracement I've drawn from here to here, which I was looking for re-entries, price did not come back up once, right? So you got to be careful. I mean, yeah, you could have gone here, but I actually closed here, and for wrong reasons, because I thought, oh, London, what's it called? Afternoon sessions at 12, right? I want to be out by 12. So this is 12 for reference. Let me get it horizontal too. So this is 12 o'clock, right? You can see at 12 o'clock, price didn't really go much further down. It did, but like it was 10 pips, right? So I wanted to close before 12. So I got out very early in comparison to 12. Like you could even be entering here because it's a inverted fair value gap and it's at a time of 9:30, which is roughly the time you can re-enter some trades. So because of that, I got out at the wrong time. So I got out, and to be fair, I'm not mad at it because it's a 1 to 14 at the end of the day, which is a very good trade. I doubled my account with me risking less than I normally risk. So not only that, not risk enough, I also got out way early because it's a 1 to 14 I got out at, but I could have held it realistically to a 1 to 26. So almost double. So I could have doubled the money I made, and then I could have 6 times that because I risked 6 times less than I normally risk. So instead of doubling my account or making what I made, I would have made 12 times what I made if I had executed properly. Came out at the right time, and then came out or risked the correct amount. Now, I'm not mad at that. Why? 1, this is my first time trading NFP in a while. Okay. 2, it's a new model. It's the first time I used this model to trade NFP. 3, the risk I used was actually because I had losses earlier in the day. I think I entered sales around here, and price ended up going up from this hourly fair value gap. So I was wrong about when. Came up to this order book before coming down. So I was wrong about that. So whenever I lose a big amount, I did put a lot of money into that. If I lose a big amount, I always reduce my risk the next couple of trades, no matter how confident I am. So that's the reasons why I reduce my risk. And you may think, oh, why did I put so much money here? Because I was anticipating NFP being bearish. So I wanted to create space, my trade. So even if price was to be volatile, it would go my way eventually, but I wouldn't be stopped out by slippage. So that was my thought process, but I was wrong about that. That's just fine. Okay, so that was why I used less risk. The reason why I came out early, I was going to be going out soon, so I was getting ready to leave. I saw rejection. I didn't know if NFP was going to sweep this liquidity here and then go back up to come down. I was like, you know what, let me draw that fib. So if it does, I can get in again. If not, I'll just close my trades. So I closed a little bit early, but now we know time and area. I think there was actually a fib of 1.5. I was aiming for 1.1507. Actually came exactly to my target. And the reason you'll see why this was my target, because if you look to the left, there was a low here, right here. The low, I mean, this is the low right here. And I was thinking it was going to get to 1.15, but I was like, passively, I'm going to target this 10507. Basically, I was going to target this low right here, the blue one. This was my target. And what happened? It reached it. To be fair, it reached it on the Sunday, sorry. So technically, yeah. But I was literally aiming for this 123. It's a beautiful trade. So my target did get hit. It was also, I believe, the minus 1.5. I can't remember which, like, maybe I used this range over here. I can't remember the range I used to find it. I think it was this one, maybe. I was like, okay, this is close to 1.5. I'm going to just go for this. This right here, if I had risked the correct amount, would have been a lot of money. Could put it like that. So the reason why I'm doing this talk is because I'm just reviewing last week's trades. And the reason why I'm reviewing last week's trades is because this is reflecting mode. This is where you learn the most about your strategy. There's 3 modes, I keep saying it. It's study mode, market mode, and reflect mode. Study mode is where you practice, you learn your strategy, you develop your model. Like what I was doing earlier in this 1,000 days of trading. I was live watching the ICT Mentorship 2022 program, making notes. That's study mode. Market mode is what I'm doing now when I'm in the markets. Well, not what I'm doing literally now, but when I'm about to enter a trade. That's the market mode. Reflector mode is this right here, when I've entered a trade previously and I'm looking back on what I could have done better, why I did what I did, and then altering the things that were wrong and then being confident and solidifying the things that were right. For example, I'm not mad at the fact that I reduced my risk because it was following a loss. That's my system. Always my system. That's number one. Number two, I am upset. I'm not upset, but I should have held my trade longer. I wasn't confident enough because I did see a lot of money and I doubled my account. So I'm like, why on earth would I not take that? And then in the grand scheme of things, of course, I could have done better, but 1 to 14 is still amazing. It's just that I could have got 1 to 25 realistically, right? So I could have doubled what I made, but I'm not mad. So I'm just solidifying what I did well. So I'm giving myself encouragement for doing well, for reducing risk. But I'm showing myself that, look, time, if we just follow our system, our target, our end goal, NFP context, we need to really understand what's happening. So that's why I'm doing reflector mode. So reflector mode, you'll see it's not my strategy that's changing, it's my management mostly that's changing with my reflector mode, because my model hasn't changed. I'm not going to say, I'm going to change my entries now to only order blocks. No, not at all. All my entries have not changed. Fair value gaps, order blocks, liquidity sweeps. Those are my 3 reasons for entry. Obviously, that's not enough on its own. Just coming to any order block is not enough. Just coming to any fair value gap is not enough. Just sweeping a relative equal highs or lows is not enough to enter a trade. But it's the 3 things that trigger. I'm looking for a trigger above from the hourly time from above to then start looking for my entry model to kick in. So that's my reason why. Now, I actually didn't go over my entry model here. So the reason why I actually literally entered was because we came up to this 2-hour order block. I was not expecting price to close above this. That's number one. Because this is the swing high, and for bearish, it shouldn't get taken out. Also, on the daily time frame, I was looking at the wicks on that candle contributing to that right here, that touch of the order block. I just thought that's bearish, man. That's bearish all day long, and it's very plausible we do that again. Okay, that's number one. Okay, so we had that swing high over here, which we're expecting not to take out. Then, from the touch over here, we had this low here, pushed up. Boom. What do? We take out this low right here. This is the 5-minute time frame. This swing low we take out. We just about trade below this swing low here. So there's 2 swing lows. Ideally, you would have waited for this, but I was like, look, NFP is going to be happening in very soon. I'm bearish. I want to get in as early as possible. So when we had this pullback right here, let's get rid of this 1.5 now. Okay. So we had this pullback. We'll remember my entry, order blocks, fair value gaps, liquidity sweeps. What do we have here? We swept the order block that is at this area right here. Why am I using this order block? Well, because it's the highest. There is a fair value gap from here to here, right? So I did note that. So technically, we could have got in at the bottom of this low hanging fruit, but it would mean that our stop loss would have to be above the first candlestick contributing, which is this blue one here. And I've learned from my mistakes. You gotta have some space. So add a pip for spreads because it's Euro USD, so you can get away with 1 pip. And what is that? Exactly 1 pip. So this is normal. 1 pip I always add no matter what, and this is Euro USD. Then on top of that, I add a little bit more. Now I think I had a 4 pip stop loss. The reason why I had a 4 pip stop loss was because I'm thinking price isn't going to close above this, so it shouldn't close above this as well. I'm assuming this is the high, so I think I say around here. I'm not sure the exact value. I would have to double check. But let's say we got in at the order block. We could go in at the fair value gap as well, right? This is the area I'm looking at price to retrace from because it's the highest point at the ultimate trade entry. Normally I enter, it could have been this because this was at the equilibrium, but that really changes everything. It goes to 1 to 3 from 1 to 5, so it almost doubles how much money we make. So this was my trade plan. It did come up a little bit into drawdown, and that was one of the things I was cautious of, which is why I reduced the risk because it could have come up, swept me out, and then delivered downwards. That's how I got it, right? It was the taking of this swing low, trading below this one. Then I waited for the pullback, which we thank goodness got all before NFP, 30 minutes before, at this order block, at this fair value gap, set my stop loss in a passive manner, and then I was happy to get in, and that's how we got in. That was our entry model in play. So that's the whole trade broken down: the daily bias, the 2-hour event order block, the 1 hour, the 5-minute market started shift after the event horizon, and then our entry model in place. So that's the system of entering a trade. It seems like deep thought process go into it, and it does, and it is, but it's necessary. And look at the rewards. So that was our trade. And to show you guys, I didn't, like I said, post it live because I didn't want to show anybody my trades, but I did document part of it. So, this is a trade we lost as well, by the way. This actually went up, did not go down. We entered it twice at low risk, stop loss hit, re-entry, and then a hit stop loss. But I was so happy with the other trade, I didn't really make a note of this. So here I explained, didn't post my NFP trade. It was low risk. I should have risked at least 6 times more based on my principle, but I misread some information, which is fine. So this is a low risk trade. Now, it is a low risk trade in the sense of I didn't fully understand my confidence in the trade. You can also see the breakdown. Oh, so we entered on the, okay, so I didn't enter on the, I entered afterwards. Okay, so I didn't catch what I was showing you. I didn't catch this was good for document things. I showed you where you could have entered, I guess, in hindsight, but I didn't actually enter on the order block touch. I entered like afterwards. So like a little bit of like a confirmation, like over here. And then I set it above this kind of a thing. Something like this. I think I entered on this order block. I don't know exactly, but I entered like something like this. I think the trade was like this. But you could have entered in on the touch of the order block, but the stop loss would have been where it was. Okay, cool. That's good to notice. So yeah, we entered there, and I said I didn't post it because I misread the information. I'm not 100% sure the information I misread. Nevertheless, we got in with less risk. And I made a joke, even for generational wealth, here we come. So the idea between this box was from midnight open, I thought we were going to go down. Instead, we actually went up and we accumulated. So this is all the accumulation of long. These are all trap buyers. This is all liquidity for sell side. So if I manipulation, if I map that downwards, the area was here. So everything here is simply just accumulation up onto that green line. So let's go back to the markets and highlight what that is. So that green line was all the way over here. So that box I was talking about, from the high to here, all of this is manipulation. So the fact that all of this is manipulation means that distribution is not always double, but it sometimes is. It's going to be all the way down here. Which what happens? Price reached this at here, which was what? 12. So double the height we reached at 12, that afternoon session, and it was double the accumulation. So that's another reason why we could have held longer. So just a side note, okay? The accumulation, we're using the power 3 there, could have given us some more confidence to hold the trade. But we didn't back it. And here we almost X'd our account. We just had a trading stop loss. I didn't want to lose the profits. I was very patient. And here we closed at 1 to 14 restored ratio, which is still impressive. But you can see we had the reaction from this zone as well. My original target was here. I'm like, you know what? Let me just close. I don't know how NFP behaves anymore. I haven't traded in a very long time. Let me just secure profits. 1 to 14 I was happy with anyway. So I did. Could have got to a 1 to 25, but it's fine. So now that is 20 minutes explaining yesterday's trade, but I believe it was worth it. NFP, big trade. Now we move on. So normally what happens after a big move that's like that is actually a consolidation. Or a retracement. Now we don't have news, so we're definitely gonna have to wait for manipulation. It is London open. It's probably 9 o'clock right now. Yeah. So it is London open, so in theory you technically can have some opportunities. So I'm gonna mark out the midnight open. It's right about here. This is the midnight open. If we traded above it, swept that, traded below it, and kind of accumulated this. So in that theory of what we had last time, if price was to move up, we expect it to get to maybe about here. If price is to continue moving down, we can expect it to move down here. Now, obviously, we don't know if this is all of accumulation. Like the accumulation could even be longer, like this. Like price could move like this, and that's the true accumulation. But we don't know yet. But obviously, for time is normally to tell. Either which way, I'm not sure where price wants to go. I'm not gonna lie. Let's have a look at the XY. So we're bullish. We've completely filled this imbalance now, so we can get rid of that. We are in a premium from this range. There is this bullish fair value that we pushed up from. If I look at the weekly, I'll be honest, I'd actually be bullish still. There is these equal highs that price can almost target in a way. Look at the daily time frame. Like this is just this area here. And the best thing is my strategy, like it's good to think as a retail trader so you can know what not to do. They'll probably see this as some resistance. So I think price is bullish to the point of taking out these highs. Do I expect some resistance? Yes, some, but not enough to reverse price. And yes, we are in a premium, and there is technically a 4 hour. In fact, there's a 4 hour order block over here. But I think we're going to be bullish at least up to that point. So to the point of the Euro USD, this could also be a bearish idea. But I need an event horizon. Following from what we saw yesterday, last week, I'm going to need more than this. Now, we did have these highs. We did sweep it a little bit. Like people would have had some loss above here for sure. And that did get taken out. And then if you have this time frame, you would know that this is some potential entry. Lines up with this kind of order block over here. And this happen on hourly time frame. You could argue this being hourly fair value gap. And then you also have kind of equal highs here, but not enough in my opinion. Anyway, 1 hour fair value gap pushed into it. Displays took out some of these equal lows. Some displacement as well taken out. And if we do the accumulation idea, get into a trade like this, which is a 1 to 3.8. This is a rough idea, which I actually do like because we did push up to 1 hour Fair Value Gap, swept these highs as well. Looks like accumulation from midnight open, which lines up with the accumulation finished from London session open. We just need a retracement up until that entry point. Consider that. Okay, so USD CAD, I'll probably be leaving alone. Get rid of all of that. Then to watch list instead, or even put it to watch list. Fuses Frank, I got this wrong. The direction was up. Obviously, NFP affected pretty much every trade. So there's that. Cut. Okay, we're now pushing up into this Fair Value Gap more. This also got wrong. Well, at least it didn't get wrong. It's just the stop loss got stopped out, I guess. I was looking at this trade, didn't enter it obviously, but looking at it, the same thing for this. This was obviously wrong. This is pre-analysis of, yeah, you can see pre-analysis of NFP. And I realized, I actually also, oh yeah, I remember the information I misread. So Euro USD, I was bullish, on DXY. I was bullish on DXY. So I've misread that this Euro USD, meaning that being bullish means that I'm looking for sales. I was a bit passive. Price action was just telling me, and price action from daily time frame and lower time frame was that price is going to go down. So I was bearish on Euro USD as a pair, but I was bullish on dollar. I thought that was a contradiction, but they were actually in alignment. I misread that in the sense of I'm thinking Euro USD is going to go down, but then price USD is bullish. So they're conflicting when actually they're in agreement. So that also gave me less confidence to put in more kind of risk involved. Because that 6 times less is following a loss and from me not being certain with it, fully confident with the trade and an FP. So there's 3 reasons why I didn't enter like my normal risk. But one of them shouldn't have been the case, which was the fact that DXY and USD price action was in agreement, not disagreement. So giving me confidence, not less confidence. But I'm glad I still entered because that would have been enough to sometimes not enter. Nevertheless, I did, and we reaped the benefits. So yeah, that's what we're looking at for USD right now. Swiss francs, we're going to keep away from for now. We got that completely wrong yesterday or last week's. Keep thinking yesterday. I was thinking about trading the whole week. I'm not going to lie. AU was another thing we're looking for sales, but we were happy and now happy with what we got through a Euro USD. I don't think I could have even entered anymore anyway. So yeah, I'm expecting price to get to this level here, which is interesting because it just lines up with nothing really. I mean, maybe we're targeting these lows now, and price just wants to continue going down. Obviously, our entry is where we've put it. Can't change anything about that. That is if it's beforehand. Was expecting this to happen. We didn't get the reaction that we was looking for from this 1 hour Fair Value Gap. I don't know why there's so many of these. Let's get rid of all of this. What is this? Redraw this. I haven't analyzed this in a while because that's my old Fibonacci. Oh, this is the order block right here. On the 4 hour. Order blocks recently have just been hitting. I like to add sometimes a fib in the order block. So we had an event on the 4 hour, which is us reaching this order block right here. Now we need to see price action do something good. So swing low over here, trade it up, and we've taken out the swing low. The only thing I don't like about the taking out this swing low is that price is moving very up and down, choppy. If I was to draw a fib from the high to the low, there is no fair value gap here. Let's go to a smaller time frame. From here to here. We kind of do have some displacement here. I mean, I won't enter this. I'm going to put this on a watch list. I don't like how it looks, personally. I mean, in theory, though, it could come up to this area of this imbalance. and then go down. But I'm not that like, I don't like the way it's moving, so to speak. So we'll have a look. We might just monitor it instead of actually actively entering, but we'll see on that. Euro GBP. Okay, so now we've got over. Okay, some low interest over here. Let me just quickly analyze this. They would even reach the fair value gap I was expecting to reach to. Price. My entry model kind of has been triggered. Would just be one on that pullback. It is involving a pair that was Euro during NFP, which was CAD. So there was some positives on CAD, which is probably why it moved beforehand. But that's no longer valid. UPAD back at this fair value gap again. Tagged in off of this bullish one, back up to this bearish one. I'm not fully understanding the vibe of GBP right now, but there is some ideas for potential sells here. For example, if I was interested in this, which took out this swing low, I'll be looking for a pullback to this order block, which price came up to, and has, if I enter that sell on the order block low, and then sell above the high, add up a couple of pips, it would actually be up 3.47 just to these equal lows. So it's plausible. But obviously, we missed that. That happened at when? That happened when I was asleep. I woke up around 7 something. So that was around 6 a.m. There is potential for another re-entry. We'll trade it. If we trade below this swing low, which we look like we are about to, we then create, obviously, assuming price gets down here, we can then look for some pullbacks to that area. So I'm actually liking the sell ideas here. Now, this may help us a bit because we are bearish for this. I'll be looking for price to come up here. Oh, the reason why I'm even looking for my entry model here is because we've come into contact with this, I believe, from the daily time frame, bearish gap, bearish fair value gap. Okay, so a bearish fair value gap daily time frame. Anything from the hourly time frame and above, a price pullback to an order block, sweeps equal highs, or an order fair value gap, I can be interested in my entry model. That's my rules. So this for daily hour fair value gap, we've come up to, traded low, traded, come back up, traded below that lower low, and these swing lows. And we look like we're about to trade below this one, which we just have. We now want the price to pull back into that range. Optimal trade entry is a fair value gap. This is the highest time frame, so it's actually opportunities to enter right here. I like to enter low hanging fruit and then secure the entry. So this is high interest as well. And I'm going to set an alert just above the halfway point right there. GBP I am now more inclined to enter. We traded lower than this, and we have this area here. So whichever one gets triggered first, and I actually do like doing this, so I know what time frame to look at. These are my trades. I like to use the highest time frame. I guess all the blocks for value gaps, etc., because it is stronger normally speaking. This one I wouldn't enter all that much. Like I want to risk like 30% of my account, 20%, 10%, maybe 10, but around 5 to 10. Others I can risk a little bit more. Now, this is not my main account in the sense of like my personal account. It's a very high risk account. Excuse me. Starting on 25, made its way to 250. So we, for the past 7 days, literally 7 days of trading, we took it from 25 to 250, which is a 10x. And that's from me making many mistakes. My most recent trade was from 120 to 250. I started that day, which is Friday, on 166, and I lost about 40-ish from this first sell of Euro USD. That took me down to 120. Then I made about 125, 124 to be exact, literally 124.00. And I made that from the NFP trade, and that took me to 250. It was about 248. And then so yeah, that's 10x. If I'd risked properly, or the risk 50, let's say I didn't lose that first trade in EU, or the risk 50 in this trade, So I would have risked, I think I risked, that would have been 5 times more, and then double. So 5 times, let's say 6 times, because this is 6x less. So 6 times 124, about 720, just say 730. Let's just say 750. 750 times 2, if I held to noon, it would be 1.5. Let's just take away 102. That's about 1,300 would have made, which would have been £25 to 1,300 in a week. Which is how many X? 52X. I'm aiming for 30. That's just for NFP. I made a lot of mistakes throughout the week, similar to that manner, holding to the right place and this, that, the third. Anyway, so what I do, right, which is going to be very interesting, is this. As you can see, I trade pretty much every pair. Obviously, I have my favorites. How do I analyze all these? So most of the time I don't. If I see like 1 or 2, 3 good setups, I'm actually good to just monitor those. Sometimes I like to just keep it simple, keep it easy, especially when it's the pairs that I trade. I trade Euro USD a lot. So price going up here is very valid for me to enter. Like I'm happy with that. This is what I would expect to happen. I don't trade GA. I actually trade GA a bit more than I should, but I like it for some reason. I don't know. I don't trade GBP NZD, so I would prioritize GBP AD over GBP NZD, despite this having this big zone as well. I'm more confident with this. Not this, as in the setup, the pair itself is what I'm talking about. But going through the daily buys, weekly, the price action, it's long to do every single pair. I don't have the time for that, or I don't want to do that, right? So how do I do it when it's not for fun? I actually start on the hourly time frame, and I look for, or even like 15 minute, and I look for occurrences. So I'm gonna start on the hourly time frame. I'm gonna look for this. You can see here we had this sweep of this swing low, push here. So this would be something I look at. And I'll now go and scroll out to see if there's context. And here we don't have context because we didn't reach the zone I was looking for. So this is not a valid trade for me to enter, even if price was to pull back up into this area here. I will not enter that because the context isn't allowing us. So I will then go on to the next one. So GU is actually similar to a Euro USD here. And the 2 hour order block as well. Push down, deliver to this low almost. But GBP is a bit more bullish than Euro, so it didn't displace as much. To be fair, it's a denser pair as well, I believe. 150 pips, like, yeah. Anyway, I'm going to leave that alone for now. Didn't trade. We did trade below these swing lows. Let me look and zoom out. But we swept this liquidity, so the target I would have had has probably been swept. Here's a fair value up here. Let me see the daily context to this first of all. Daily is a bit tough because it's a bit moving very slow. I also don't like how it's moving. Traded below this low here, so we are bearish, I guess. Swept this, swept that, so maybe we're actually bullish. There's that range. What's the minute open at? Minute open. Traded above. Didn't really sweep anything crazy and then came back down. I wouldn't be confident in this. I'll be more inclined to a sell, to be fair, but at the end of the day, I don't like the event. It didn't really sweep this properly. No pull back into this fair value gap. But technically, it did pull into this one, but the remainder of the imbalance, it didn't reach. I'm not interested in sells. I need a better horizon than that. Hourly, we'll just be moving up. We haven't really switched, and we are deep into this. I think it's the order block. This looks like price wants to go up, which fits the overall kind of purpose of this. Interesting enough, GJ is actually dropping. But USD is bullish, so it's a bit different. So we filled the daily fair value gap here, which is really nice. So we've displaced this. I'd be interested in a sell if price was to get this fair value gap. Something like this is something I'd be interested in. It's a bit, it's like medium interest, nothing high. But this CAD though, so gotta be careful with those. I'm leaving the Swiss francs alone and CAD alone. Okay, what's this? It's taking out that high. We are in a discount. We have traded below this low right here. Time. So we started last week. We have taken a while to get back in the range. We do, to be fair, we have taken out this swing low right here, and we have had displacements in that. Make this green. We swept this high, displaced downwards, taking out these swing lows, and this area here, we would be looking for pullback before we start looking for entry. But I'm actually looking at the zone. Is there even any? There is. Okay, so we have a fair value gap here, for example. So this is a 3-minute fair value gap. I could look for a potential retracement to then go to the downside. This is a medium. Not a pair I really trade that much. Actually, a lot of opportunities I'm seeing, I'm noticing. Leave CAD and the USD alone for now. I do not like this. I don't like consolidations personally. Put it on low interest or watch list, but keep it there for now. Okay, wait. This could be valid. Hourly strong fair value up here. Just mark that out. There's actually a lot of opportunities I'm noticing. I'm seeing my I'm seeing my strategy clearer, if that makes sense. On the 50-minute time frame, we're obviously bullish here, trading below this swing low, and this swing low currently. From the highs to the low, we have a fair value gap over here, which we have to make a different color. Let's say here. Make it blue, time frame 15 minutes. I'll be looking for potential retracement and sell. Why? Well, on the hourly time frame, we've come up to this fair value gap, traded below the swing lows. There's a 50-minute fair value gap here, pull back to such. Makes sense. Okay. Okay, I'm gonna stay away from these ones. I don't like to look at these. But truly, like this, like valid setups. But yeah, we didn't like this. The context of this one. Okay, let's just have a look at the ones we've analyzed. So EURUSD from accumulation, the kind of the daily bias. If I had to guess, I would say bearish. Sorry, strong bearishness, momentum. I believe we're taking out these lows at least. The accumulation prediction, but then this is the overall target. So I think it may get to this level over a couple of days. I think it might reach this today. That would be the aim if everything looks good. GBP AUD. We are selling the GBP. We're in this daily fair value gap area. We had a swing, taking these swing lows. Price then created this range, displaced. We want to see that pull back into this displacement range. 50-minute fair value gap and up to hit the optimal trade entry, which would be our entry. And the same thing can be said about GBP/NZD. We just have a clearer order block here. This one is just the daily. So this GA is actually stronger. And on EURUSD, we're also bullish on AUD here. We'll just need to pull back to this 3-minute fair value gap. EURNZD pull back to this 50-minute fair value gap, 1 hour fair value gap here, which is a strong one. Up to this, we had that swing thing on this swing low, etc. And then yeah, GJ, same thing, but it's a bit more work to do to come back to this area, but it's there. And yeah, the Euro CAD I'm not happy with because it didn't reach the 1 hour fair value gap, but it did give us the signal, but it is CAD, so we are careful. Even that alone, and this I just want to monitor is a consolidation. So yeah, tongue twister, but those are what I'm looking at. EURUSD, GA, GBP/NZD. I might take some of these a little bit slower in terms of risk, just because we did have a very big move here last week, but it's not enough reason for me, in my opinion, to start being passive. If I'm not confident, I will reduce my risk, but my confidence should be based on what happened last week. It's a new week, new trades. we're going to be active again. So that's our analysis. This was a 45-minute session. First 20 minutes, we reflected on last week's NFP trades specifically. And then this new week now, we are focusing on potential opportunities. We have found potentially 6, which is a great number. And we just need them to come to entry. So this is what I'll be watching off stream. And I'll probably be live again, maybe during London session. New York Open. If anything, stay tuned on the Telegram. I post my ideas here if you want to be kept up to date. Remember, this is a documentary style content of me documenting my trading journey. This is day 90, not of all my trading journey, of the new kind of era. I am very much behind on a lot of other things, such as, for one, my Instagram post. I haven't posted a single thing yet. I do have some pictures. I'm editing one right now. I have maybe about, I don't know, maybe like 10 pictures I could post on this account. And we're going to be making reels as well. I'm just doing some research on the algorithm. But I want to create like a storage of content. So I don't want to just post and then not post for like a couple of months. I want to have at least a structure of maybe a month worth of posts, so that even if I don't record for a while, I would have content that can be posted. So that's the only reason why I haven't posted. And I'm doing some recording on a Thursday, which would be obviously good to get some good content, some B-rolls and things of that nature. So yeah, that will be my plan. And yeah, so I am editing a couple of pictures before I post them, and then we'll go from there. So again, off stream, if you want to join the Telegram, everything's in the link in the description. I need to start using this more. I'm going to update it soon. There's an update I haven't pushed it, and I haven't been logging my trades. There's a bug that I didn't like. It's to do with screenshots, so I will be incorporating that soon, and very soon. But for now, we're going to pay attention to these setups, and we'll go from there. But thank you guys for watching this back. I think there's like 15 views we got on the last stream. Very grateful. Thank you very much. Yeah, I'm gonna be off stream now for a little while, and then I will potentially show you on New York Open if I'm streaming again. If not, stay tuned on Telegram. Link in the description. To me, your boy CJ Atsi, and this is our day 90. Let's go. 90% of the way there to 100. 9% for the whole journey. Peace.